Hey everyone, this is Jay Soloff at Investors Alley, and this is our options trade of the week. So we are looking at marketchameleon.com at the unusual option volume page, and like I normally do, I sort it by volume to see where most of the action is happening in some of the bigger names. Tesla's at the top. It just had earnings. Facebook, Amazon also earnings recently, so not a surprise to see them up here. Looking at Amazon, it's kind of an interesting situation. They had more revenue than expected, which is not a huge surprise since so many people are using it stuck at home. They did have some costs associated with the pandemic, which hurt their bottom line. And like most companies, they have a lot, they're worried about the future. A lot of, pretty much all the companies are worried about, the future given the pandemic. However, I think Amazon, being what it is, should be all right, and probably there's a floor in how far it's going to fall. Well, let's see if that plays out in the actual trades. So if we go to trades and then sort by quantity, now you'll notice that with Amazon, the quantity is going to be a lot smaller because the stock is so expensive. That means the options are going to be really expensive. And there's just not that many are going to trade because it's like doing a mega option, right? So look at the biggest one is 1,000 lot, but even 1,000 lot, when you're dealing with 1,000 lot at 37.50, you're dealing with almost $4 million. So you have to take the size into account when you're looking at these trades. I mean, even this 500 lot call in July, it's $7.3 million notional amount. So obviously the numbers are going to be smaller in terms of quantity because the options are so much more expensive. So we look at this trade now. Amazon in a big move, dropped after earnings. But if you look at this trade that was done when it was about 23.25, and someone sold, looks like they sold the 2100 puts. So what does that mean? Well, it's basically suggesting that there's a floor at 2100, and anything above that you collect the premium. But the risk is below that is crazy because Amazon makes a big move and goes down to, let's say, 1900, then you have extreme risk on the downside. So what if you like the premise of selling a put in Amazon because you think there's a floor, but you don't want to have that kind of risk or have to put up that kind of margin? Well, let's take a look. So you can see here Amazon shot up, so this move was not going to be sustainable. And hovered around here, but with a lot of volatility. So now it's moved down after earnings. But even if you don't expect it to move down, back down to, let's say, 1900, look at the size of the moves happening here. I mean, there's a lot of volatility. So being short 2100 puts, cash secured or margin secured or whatever it might be, is going to be dangerous and not the sort of thing that you want to mess around with if you are a more of a casual trader. Now this is already you can look at this 2100, it's already up, so they were sold at 37.50, they're already up to about $50. So you could see the type of movements that happen even intraday with Amazon. But you could always move down. Let's say you wanted to do the 2000 put, and then you could do it as a spread, so you're protecting yourself and not putting up as much margin. So in that case, you'd sell the 2000 and maybe maybe you go down to, let's say, 1975. So you're limiting your risk to that $25, so 2,500 for a one lot, and you're making 367. Now that's obviously not the same as selling a put for 37.50, but then you're also reducing your risk and you're quite a bit further away. So, or let's say you go down to 1900, which is where it was before the big move higher, and because of that you're willing to take some more risk and maybe go out 50, so you're risking $5,000 on it, and you're making close to $5, not quite $5 in credit. So there's different ways to look at this. Narrowing the spread will reduce your risk, going further away will reduce your risk, but every bit that you reduce your risk, you're also reducing your credit. So it's this risk reward profile that you have to match to your own personal risk. But this is the sort of stock you don't want to mess around with if you're not comfortable trading a volatile stock and ones with really high priced options. So I talk about this sort of thing. We talk about strategies and different trade ideas and different market dynamics in my Coffee and Condors biweekly chat. So if you want to check it out, go to coffeeandcondorsvideo.com. So that's all one word, coffeeandcondorsvideo.com, if you want to check it out and learn more about this service.